Both China and Russia have gone ahead and said that all investments and trade that generally happens through the US dollar can move to other currencies like the yuan or the Russian ruble. If we look at retail portfolios, we'll have very little gold positions, right? Retail doesn't really generally invest in gold in India or elsewhere. We like to buy gold directly from a jeweler and stuff like that. For use, right? Or to making our wives happy. If you would have invested last Diwali in gold, you would be sitting at 27-28% kind of return.
Hi, welcome to another episode of Cut the Noise. We're going to talk today about gold prices, why they have increased, and in today's environment, what are the likely implications for gold prices going forward. I have with me Raman. Raman is the managing director of GRIP's Fixed Income Opportunities Fund. But more importantly, Raman has been a core member of building the GRIP platform, introducing products like corporate bonds, and is our in-house investment advisor for all of our personal finances. Raman, welcome to CTN.
Thank you so much, Nikhil.
Raman, we've seen gold prices increase by almost 20% since last Diwali.
Yeah.
What do you attribute the increase to?
So it's been an interesting year for gold. Over the last, like you said, it's actually up more than 25 now. There are many factors to it, but two most important factors are one, the impending recession talks that keep happening in the US market, and the de-dollarization trade that people keep talking about. And the second is, overall a flight to safety. As interest rates have gone up in the US market, there is some amount of fear that the markets might come down, and there's some amount of money that is moved into gold as a hedge to the overall market. So those are two primary reasons where gold markets have gone up.
Sure. Cut the Noise is all about making concepts simpler. So let's talk about each one of these. What do you mean by de-dollarization? If you could just explain that concept.
So as a concept, both China and Russia have gone ahead and said that all investments and trade that generally happens through the US dollar can move to other currencies like the yuan or the Russian ruble. So they have been doing trade as with India as well. In those currencies. So a lot of countries are actually moving away from both investments as well as in trade away from dollar. While this takes years and years because dollar is practically the reserve country for most of the trade that happens, there is a small amount of movement that is happening into different currencies and different trades. A lot of investments also used to happen in the US Treasury. And as interest rates have gone up there very, very drastically, a lot of people have pulled out money, or new investments is not going there, but in going into commodities like gold, silver, etc., just to build reserves in a different format for most. So this is practically what de-dollarization trade is. That money not going into US Treasury, but going into other asset classes or gold as a matter of fact.
Oh, interesting. So you're saying that people used to interpret the US dollar as the safest hedge.
Yeah.
But because they are now trading in other currencies, they're reducing the dependence on the dollar.
Yeah.
But to keep the hedge as a government treasury, they're choosing gold.
Yes.
And they're replacing replacing US dollar for gold as a hedge in their currency.
So if you look at it, 30, 40 years back, gold used to be the reserve, right?
That's right.
Every country used to keep gold as reserve, and then, US dollar came in. So it took 10, 15 years for US dollar, everybody. So all new money that the country used to invest or generate used to go into US Treasury, and that's what the Forex reserves, so to say, that, there are news that, India's Forex reserve is $350 billion, etc. It's gone up or down. So those reserves are kept because of the fact that they want to trade across the globe, right? So countries keep those kind of reserves, and that reserve is practically US Treasury. That's what the investment used to be. Now the additional money that is coming, not that people are taking out money from Treasury, that's happening, but new money is actually going more into gold than US Treasury.
Interesting. The second thing you mentioned, and which is more, as we've seen it happen multiple times with gold, that whenever things becomes more uncertain, people go to gold.
Sure.
Obviously, we're in a market with tremendous economic uncertainty and uncertainty around war. How is that playing out into gold prices?
So, gold is generally considered as a hedge if anything goes wrong, right? Though it's not a 1:1 hedge, it doesn't mean that, if US market or any global market comes down by 10%, gold will go up by 10%. It's always a safe haven. Gold as a commodity you can touch, feel, etc., right? So you keep it in reserves. So that way, it becomes like a small amount of hedge. That's why you see a flight to safety, what it is called. is that people don't go into either US Treasury or US stocks, bonds. They actually go and invest in gold. So this is exactly what is happening. As soon as the fear starts increasing a little bit, then people start buying gold, and this is exactly what has played out in the last 1 year. While not saying that we are in a recession, right?
Sure.
US market they are fearful that we might be in a recession, but at the end of the day, we've not gone into a recession. We've not had too much negative growth and stuff, but there's fear like wars happening now, Israel, Hamas, etc. So those are fears that lead to the fact that at the end of the day, some amount of gold buying happens there, and we're still in a position where gold is majority being bought by other governments. It's not like you and I are buying. So if we look at retail portfolios, we'll have very little gold positions, right?
That's
Maximum, we'll have, retail doesn't really generally invest in gold in India or elsewhere. We like to buy gold directly from a jeweler and stuff like that, for use, right? Or to making our wives happy. So practically is used for that, but we don't really invest in gold as a thinking that the gold prices will go up, or when things go bad, at least gold will go up, right?
That's right. Fair point, and but I think that as people build more diversified portfolios, and Grip is about diversification, there are more choices now to actually invest in gold.
Absolutely.
Also as a financial investment, right, and not just a touch and feel.
Sure.
In your view, what would be the best formats in which an investment in gold can be done?
So you're bang on, right? Earlier, there used to be only one option, that physically you go and buy gold, right? Either coins or bars or, from a jeweler, right? But that always used to have some amount of risk. The risk is storage risk. You have to create a locker, you have to keep it at home, etc. Sure. There's a risk that it can be stolen, etc. So, you never used to extract, whenever you had to sell it, you never used to extract the same value of it. Now there are more options. So now there's something called digital gold. Digital gold is basically you can go online and buy it. So there are a lot of places that you can buy digital gold. The most famous and the most popular of them all is the sovereign gold bonds, which is what the government actually issues. It's better off, so you get 1:1 return of gold prices, plus a government gives you an additional 2.5% to participate. It's also a way of government to actually utilize the gold reserves that they're currently sitting with, right? So against that, you can actually go and buy these sovereign gold bonds, and that's what leads to slightly better returns. And last 1 year has been really, really good. So if you would have invested last Diwali in gold, you would be sitting at 27-28% kind of return in 1 year.
So there is obviously the sovereign gold bonds.
Yeah.
There is the
digital
gold that you can buy.
Yeah.
And if you want returns which is more than monetary and wife's happiness, you can buy more physical gold.
More physical gold, and again, that comes with caveats that you have to make sure that there are less making charges and the selling bit comes in, right? But you never sell gold, right? The time you only will sell jewelry is when you're really in debt or something like that. It's really a catastrophic scenario in your house. But so gold jewelry is never sold, and it's considered as a bad omen in Indian society. But at the end of the day, these digital gold, and when you buy physical gold, it has to be a certain amount, right? 6,000 rupees, etc. In jewelry, the amounts are much higher. In digital gold, you can invest as low as 1,000. In sovereign gold bonds, you can invest as low as 5,000. So what these digital golds have also done is the fact that actually fractionalized most of these to bring it to a level where anybody and everybody can invest. So it made it more accessible for people to invest.
Understood. Okay. No, thank you, Raman, for cutting it down for us and making the appreciation in gold so simple.
No, thank you so much for having me here.
Thank you.
Thanks.
Thank you for watching. That's all for today. If you have any questions on this topic, put them in the comments box and we'll make sure we give you an answer. Subscribe to our channel and continue watching for the next edition of Cut the Noise.
Investments in debt securities are subject to risks. Read all the offer-related documents carefully.